The CCI, what a wonderful indicator this is. It is for me. I love it. All my trading is based off the CCI, and I'm just revisiting. I don't think it's old. It's not even new. It's just something, just another way of looking at the strategy. If you search around the internet, you'll see some things here. This is off Forex Factory, the CCI 50 system, which a guy called Dr. Bob from Woody's traded. And then there's just other links. If you just keep looking around, there's another one here, the zero line reject by Mellow Yellow. Okay, so I guess my ideas aren't original either, but this is a good way to trade. As with all trading, you will have losses, so don't expect there to be 100% winners. Even if you had a 99% success rate strategy, you're still going to have 1% losers. Okay. So what we have is two charts. This is crude oil. On the left-hand side, I have a 30-minute chart, and on the right-hand side, I have a 5-minute chart. And let's just go through it all. Down the bottom is a good old MACD. I just use the MACD as it just also visually helps me. Look, I have a love-hate relationship with the MACD. It's just there. I really don't take signals from it, but it's just there. Okay, it just helps with entering and exiting trades. Just going, oh, okay, well that's doing that. It's simple as that. Obviously, we have CCIs. We have on both the charts are the same. I have a 14 CCI, which is the stock standard one that comes with TradingView. I've just changed it to blue, and I have the moving average turned off. And the other one is a 50 CCI, exactly the same thing. Exactly the same thing. They're on both charts. We have moving averages on both charts. On the 5-minute chart, I have a 9 EMA, and on the 30 EMA, on the 30-minute chart, I also have a 9 EMA, and that's in black. The only reason it's there is just to help me visualize the line, how the bars are. It just kind of helps me visualize. It sort of hugs price, and it's also a visual aid in helping me see, okay, price is moving upwards or through the 9. That's all it is. The red line on the 5-minute chart is the 34 EMA. Okay, it's this one here. Okay, and the purple line is the 204 EMA, and the reason it is 204 is I'm taking measurement from the 30-minute chart EMA and putting it onto the 5-minute chart. So on the 30-minute chart, I have a 34 EMA, okay, which is purple. But sometimes I don't trade. I don't have the 30-minute chart open, but I want to see what the 30-minute chart is doing. That is all. There's nothing more. And so rather than having two, sometimes I trade like this, right? I just have the one chart, and I don't want to have to keep flicking back. Okay, it's just too much information. So I've made this 204 EMA is the same length as the 34 on the 30-minute chart, and the way to do that is this. I think I've done this before. So let's say you want to bring an EMA from a higher time frame onto the current trading chart. In my case, it's 34. So I go 34 times the actual length of the chart, which is 30 minutes. So times that by 30. That gives us this figure. Okay. Now I want to bring this 34 over to the 5-minute chart. So our trading charts are 5 minutes, so divide that by 5, and that gives you 204. It's a roundabout. It's not exactly perfect, but it's pretty close. Okay, so now I can close the 30 down, and I can just look at this purple line and go, okay, I know where price is on the 30-minute chart. It's under. Okay, as simple as that. But we'll just keep it up for now. Okay, taking trades. How do we do it? I highly recommend that you only trade crude oil, that is, in the USA session. It can be traded here in the UK, but it has a lot lower liquidity, okay, than the USA session. So the USA session is this grey and pink, okay. There's more money, more people playing, and there's more volatility, and that's what we need. We need these bars to be moving. So the first thing we look for is, where is price in relationship to the 34 EMA? Okay, 34 EMA is the red. So in this instance here, price is under. Okay, and we'll take this trade. So price has just broken through. I now want to look at the 50 CCI. Where is the 50 CCI in relationship to this middle line, which is 0? It is under, okay? At the time of this bar, it would have been moving downwards. Also, I need to see that the 14 CCI is also under. It has to be under this 0 line of the CCI, okay? You can see both of them shot down together. So, to me, that's an entry point based on the CCIs. Also, where is price in relationship to the 34 EMA and also the 204 EMA? Well, it's under both. So, to me, that's a trade. I would take the trade and scalp it out wherever you want to go to. My exit points would be when this 14 CCI has come back through the minus 100 zone. Just get out, okay? This, and also just look at the MACD. That also turned over. Okay, the MACDs are a really lagging indicator, but it just, you might be in this trade going, oh man, am I right? And if the MACD's also turning over, it's just adding value to the trade. So now we're waiting for another trade. So when is the next trade? Where is price in relationship to the 34 EMA? It's pushing through. It's broke through the 9, it's pushing through the 34, and right now it's coming up to the 204 right here. So let's have a look at a trade setup. Where is the 50 CCI? It's almost at the 0 line. Is that an entry? No. It's got to break through, okay? And we also need to see a bar close above. Okay, that sort of did, but it's like right on the line, okay? So we'll just wait. There's no harm in waiting, and if you miss the trade, you didn't lose. So we're just waiting. We can see the MACD's turned up, so that's also a good sign. And we can see the 50 CCI is still sort of hovering just under. Anyway, we get to this point here, prices bounce back down, the MACD's sort of pushed down, the 50 starts to turn up, the 14 CCI goes above the 100, that's a fantastic sign. And now you start looking for an entry, which would be there, okay? Yet again, you scalp when this 14 turns over. Straight away, the market turned around, and your entry point would have been around about here. And why? We'll have a look at the 50. That went straight down. The 14 went straight down. And, of course, the MACD did as well. So now we're looking for more trades. This 50 is still under the 0 line, only just, although it's sort of pushing backwards. Price has gone up through the 34. There's still no trade. This 50 hasn't gone above the 0. Okay, and it's certainly nowhere near this 204. So to me, I'd be thinking, you know what? It's either going to just oscillate up and down for a while, or there may be another trade. And another trade did come, which would have happened probably there. A bit hard to get it exactly, but the 50's under, the 14 has now hit the minus 100. To me, that's the best signal you can get. You take the trade, and you would have got out quite possibly here somewhere. It's a very small trade. Look, you would have come down here, and then it would have sucked back immediately. I would have been getting out, just going, there's just too many buys down here. And have a look at the MACD. The lines are just on top of each other. It's just flat. And then our second to last trade for the night happened right here. You can see the 50 broke through the 0 line. Okay, the 14 was way above, and all signals were met. Price is above everything. There's another trade. and there was a late trade here almost at the close of the session. I wouldn't have taken this. I would have been right out of my trading account, and you can see the 50 is above the 0 and the 14 is well on its way moving upwards. The MACD is also helping, and bang, there's your trade. It's as simple as that, but very hard to do. Okay, and the shorts are exactly the same. We don't need to go through it all, or do we? Okay, we will on this one. This one's a bit trickier. Obviously, nice big trades through here. So we need, first of all, we go, where is price? Well, price is under the 34 EMA, okay? So now there's two schools of thought here. You could actually take this trade based on a couple of things, and I haven't mentioned this, but the momentum of the 50 is moving downwards, and this 14 CCI has broken through its 100, okay, minus 100. So right here, you could be thinking, well, this might be a trade, okay? I would be very careful about thinking along those lines, because as you could see, if you had have entered here, it would have sucked back up. It's good to have momentum, but I really want to see this 50 CCI break through the 0, okay? And we only had to wait 5, 10, about half an hour. You're just better off waiting, man. At the end of the day, what's half an hour? Just wait until price breaks through. You can see that the 14 CCI reversed and then came back down through the minus 100, and at the same time this 50 started to break through. The MACD saying we're fully short, and you take the trade, okay? That's the safest way to trade this setup, and by all means you do what you want to do. If you want to get in, this 14 breaks through the minus 100 here for a short, you can do that. So all through here you can see the 50 CCI was, let me just get this, from this point to this point it was all long, okay? So any trades here would have been good anywhere in this area. Now of course this 14's ducked down, done a bit of ducking and weaving, come back up again, gone down. There's many ways to trade that. I wonder if that should be for another video. I think the safest way to trade this when the 50 is above the 0 for a long time or below is just try and take the breakouts when this 14 is above 0 and then breaking out through the 100, which would have been there. They're going to be short scalps. You can see here it broke out through, yeah, it pulled back on you a bit, you could take a 0 line recrossing, which could be, you can see it broke through there, came down and then came back through the 0. You could have taken that. That would have been around about here, very small scalp, and same with these ones here. Okay, so there's many different ways to trade. You need to just back test this yourself and find something that is really suitable. I just trade the rock solid 100% indicators, which is when it always breaks through the 100, or in this case here the 0 at least, okay? And if I take a trade and it turns on me, well, so be it. At least I played the game to my strategy. So you can keep this 30-minute chart up also. If you want to have a look at, that can also help you decide. You can look at the indicators here and go, well, where are they in relationship to the 5-minute chart? That's also another good way of trying to help you decide to take a trade. Like, let's have a look here. Yeah, see in here, it's just muck. It's just crap. It's just really, don't trade the London session on oil. This is where you want to start trading. But if you look at the 30-minute chart, you can see that price is well above the 9 at this point, around about here. And you can see both the CCIs are above 0. You know, it's in a good position. It's strong. The market is very strong here. And then obviously a massive pullback here on both of these. And then they both go together, and there's your long. CCI is a wonderful indicator. If used correctly, you can really benefit. I think you need to practice a lot though to read it. But it's a very, once you understand it, it's a very simple strategy. All right, go practice that, and good luck.